because liquidity excess of 11 lakh crore, 9 lakh crore creates its own problems. So are there other tools, like for instance MSS? Is that on the table, or will you have to remove liquidity, reduce liquidity because it can create mischief? MSS or increasing SLR, I don't know.
You see, at the moment, we are okay with the level of liquidity which is there, and we have assured provision of, the RBI, and on behalf of RBI, I have assured that RBI will ensure availability of ample liquidity. We stand committed to that. Several instruments have been used in the past to deal with situations like this. All instruments are on the table. If required, we will evolve new instruments. I don't rule out any possibility or any instrument.
Okay. So just a minor thing on this, if I go on with bond markets, the equity market viewers are going to beat me up. Just one word more, SDLs, the state loans, you did one OMO to purchase them. Now the open market was more for Government of India bonds. Is that also on the table, purchase of SDLs, because their yields have gone up by 50 basis?
You see, SDL, when we announced for the first time in the last year, in the current year, we did SDL, and my recollection is we did 2 or 3 OMOs, not just one. We did 2 or 3, and we have practically covered all the states. Now, the current dispensation is till 31st March, and it is still there. We will evaluate the situation and take a call as may be required.
Okay. Will you also, I mean, there is a lot of attention placed on tenure in your intervention and even in references, common references. But actually corporate sector borrows off the 5-year. Most of their loans are 3 and 5 year. And once before you all had even, intervened in the 5-year part of the yield curve. Is that also an option?
You see, tenure perhaps...
Tenure only helps the government, sir.
Tenure perhaps is visible, is more visible in terms of our action. Yeah. It is possible. Yeah. But we are looking at a range of, I don't want to specify, I don't want to sort of, but we are looking at a range of bonds. It is not just tenure. And we are very sensitive to the fact that, in fact, why do we do yield management? It is not just government borrowing requirement. It is also the cost of borrowing for the private sector. Yes. Because the private sector borrowing from the market, whether it is corporate bonds or commercial paper, they are all benchmarked on the GSEC rates of corresponding maturity. Yes. So in that sense, a 3-year bond or a 5-year Government of India bond or a 10-year or whatever be the tenure, they are all important. Yeah. So therefore, it is not just we are focusing on 10, we look at a spectrum of bonds.
Okay. So, ultimately it is the banking sector which has to take the load. And they could take 12 lakh crore last year because they were staring at an abyss in terms of, growth. But now, growth is 11%, 10-11% is the forecast. Is your forecast also as strong for next year?
We have given 10.5. Yeah. 10.5% is our forecast for next year.
So considering that, where else, if banks are, because they're going to see growth, they may be unwilling to buy the same amount. Also, there is an MTM loss. If they see yields jumping as they have seen abroad, there is that reluctance to buy. So what is the option? Who else? It has to be RBI. Or one was expecting the bond index inclusion. Is there any...
You see, so far as the bond index inclusion is there, we are constantly engaged with the, the concerned agencies. And with regard to the, inclusion of India or India's participation in the Euroclear, that kind of facility also, we are in very advanced stage of discussion with the authorities on the other side. Both government and the Reserve Bank, we are fully engaged with the authorities on the other side.
Okay. So hopefully that will open, a window. The other big window that was there in the monetary policy announcement is that you will create a retail segment to buy bonds. At what stage is it? There is a lot of hope. If you're only going to give me 6.5% or 6.15 for a 10-year and tax adjusted, it will be like 4.5. It may not attract attention.
No, let us see there. It is work in progress. We have a whole team of RBI working on it. There is a technology aspect also. Yes. And all these details are being worked out. And we will be issuing some guidelines in the next few weeks.
Okay. No, I mean, will there be like ATCC or, you know...
Let's wait. Let's wait for...
or
that to come.
repoability, is that even an option?
I think you will
have to
know
wait.
when we issue the guidelines.
Okay, okay. I mean, that will be one outlet for the bond market. Okay, let me now come to the other things that the retail sector is, eagerly waiting to hear from you. Cryptocurrencies. A lot of central bankers have spoken against it. What is your view?
See, we have certain major concerns about cryptocurrency. We have communicated them to the government. It is under consideration in the government. And I do expect, and I think sooner or later the government will take a call, and if required, the parliament also will consider and decide. I want to also make it very clear that technology, that is the blockchain technology is different.
Yes.
Blockchain technology has to be, the benefits of it have to be exploited.
Yes.
That is another thing. But on crypto, we have major concerns from the financial stability angle. We have shared it with the government. Government will consider and take a call.
Okay. So